Good afternoon, everyone. Brett Crowther back with you on Short Verticals. Hey, we have a lot to cover today. In fact, I'm going to change things around. We're going to get right into starting with some potential paper trades, and right after that, we're going to get into looking at some conditional orders because that's what you requested of me in some of the comments, and looking like how can we place some conditional orders on Thinkorswim on these types of trades. And then we're going to look at more and more and more. We're going to look at chart after chart after chart, look for potential setups, potential other trade opportunities. We'll go through it again just because repetition is the mother of learning, right? But good to have you with me. Got some flannel on today. Why? This is the first measurable snow we've had in Utah all year. Usually, I've been shoveling snow since almost Thanksgiving, and yet this is the first time this year. And so we're way behind schedule on our snow. I know other parts of the country have had plenty of it, but not us. We need it. And so I'm grateful to have it. Hey, and I just want to do a shout out. Hello, everyone who's joining us. Richard, JD, Wiley, Kubota, Eric, good to have you with me. So as we jump into this, though, give me 10 seconds to cover some disclosures. This is important to cover. Do remember that options do carry a high level of risk, not suitable for all investors. The information that we cover here is for informational purposes only and should not be considered a recommendation. Let's see what else. The paper money application is for educational purposes only. Short options can be assigned at any time, even if they're out of the money. Investing does involve risk, including loss of principals. Past performance is no guarantee of future results. And the last thing I want to cover on this is that, and we will be covering this today, a stop loss order does not guarantee that you'll be executed at that price. It turns into a market order and it can be filled differently than where the actual stop order is set. So keep that in mind. All right, buried there in PA, huh? 18 inches. Boy, again, if you can, send it our way because we still need so much more. We're still so short on water. We need it desperately. In fact, I was joking with the other coaches this morning. We were having a morning meeting that 2 weeks ago I was out watering my bushes because we just haven't had anything, and the weather has been like 50 degrees. And I thought these bushes are going to die of thirst in the middle of February, which I thought was crazy, but that's the way it goes. All right, so hey, I said I wanted to start today and get right into looking at some trades. And the reason why I want to do that is, again, so that we can look at the other question that you asked, which is about setting some conditional orders. And so I want to make sure we have time for that. And so to do that, I'm going to kind of reverse things from how we typically would go about it. Real quick, looking at the overall market, we talked about this last Thursday. It's throwing me off. I want to say Wednesday because of that Monday holiday, right? Hopefully your President's Day was good if you got that off. But looking at last week, we're right here and we were staying in this channel. Where is it now? It's still in that channel. So we're still slightly bullish to sideways in that overall market direction. Looking at the SPX, not really changing anything up from what we've seen since when? Since actually about mid-December, mid-late December. It's been kind of stuck in a rut here, going sideways. And so that does open up opportunities for both bullish and bearish trades, which we will look at both today. But the first one, I want to look at this one, and really I went through a bunch of charts, and there's nothing great or saying this is the end all be all. I just went through charts and said, okay, which stocks have some high volume, have been in a some sort of a trend that sets up something technically. And so let's walk through some of these and see what we can do about setting up some potential orders. Okay, Jack Wood, howdy, how you doing? All right, so looking at this one here, what do we have? Walmart. And so I was looking at Walmart, and I thought this was interesting because Walmart came out with earnings this morning, and it was pretty close to what they expected. And I didn't read into anything that came out on it. Oh, there's Ben. I forgot. By the way, Ben Watson is doing the chat. He's covering chat this morning or this afternoon. I just want to thank him. Good friend of mine, terrific guy, terrific coach. And so say hi to him in the chat, but he'll be covering that. And he did mention, follow us on X, and because what I want, in fact, let me show you this right now while I'm on that. Ben will have his is Ben Watson CS, mine's at Brett Crowther CS, but go over there and give us a follow. Like even this morning I was posting about, Deere was up $30 pre-market due to their earnings, where they beat their earnings and it gapped up significantly. Posted about some of the labor data that came out, and also talking about the trade deficit that came out. And so, post lot, this one was Garmin, ran up a hill pretty quickly. It was it was at $252, a big gap up pre-market after that earnings release. And so, keep you up to date on things that are going on in the market. And so again, follow me and follow Ben. Again, let me get back there and show you. Come on now, it doesn't want to go. Well, doesn't want to slide up, but Brett Crowther, CS, and Ben Watson, CS. So give us a follow. All right. So coming back to this, now we have this Walmart here where it had a level of support back in here and ran up and it found some resistance up in here and is pulling back. And let me remove this so I can walk you through kind of the technical aspect of what is kind of setting up here. And, we could look at that and say, okay, where could it come back? Well, it could come back to the moving average. That's, it's a little bit off. That doesn't quite fully make it back there. And this is the personality of some stocks. Some will follow a 50 pretty well. Some will follow a 30 pretty well. In fact, let me just change this. I'm going to right click on that. I'm going to edit this study and show you that if I change that to a 30, you can see this one, it kind of catches a little bit better. We got it kind of in the middle here when it's going sideways and not trending. But as it started to go in this trend, you can see how it started to catch those lows better. And so, there's some possibility of a little future or potential, a little more pullback. But, there's also, I was looking at the Fibonacci's, and while this has not bounced yet on Walmart, it is setting up for a potential area where it could bounce. All right. And let me show you what I mean here. In fact, let me hide these and just drag these down just a little bit for now. In fact, I'm just going to hide that volume all the way down. All right. And if I come down to my drawing tools and I grab the Fibonacci retracements, I'm going to draw it from the support up to that resistance up there. And what we're going to see is on a typical retracement, we'll often see it pull back about a third to two-thirds, somewhere in that ballpark. And these numbers don't line up perfectly with that, but this is the general area. This is about that third to two-thirds, and half being right there in the middle, right? And so it's kind of bouncing off that area. And so now this is where I'd like to wait and see where it closes and even give us one more day to see if we can get a bounce off support here, probably that 50% Fibonacci retracement, and give us a bull flag kind of setup, right? But it doesn't, I'm not teaching the class tomorrow. So we got to do what we can today. And so I want to look at this and see what we can potentially set up here. And so let's go over and take a look, thinking that, okay, this could potentially bounce off this area and head back up. And there's some things that it's not just looking at, okay, this is a potential area, but I was also looking at, like here on the RSI, if I back out here a bit, we have kind of this confirmation of a support level here on the RSI as well. I come across here, you can see this is where it would typically find support. So as it pulled back, it was right about in this area where it found support and started going back the other direction, right? This is right here is where it came down, bounced off this level of support, right? Right here is where it got that little middle one. And so right now is right, if it follows what it has done in the past, well, this could potentially be an area where it could turn around. And that's what gave me a little bit more motivation to go out and set this paper trade in place rather than just going off the Fibonacci's, because again, we haven't seen that turnaround yet. But the fact that it is in a potential zone where it could potentially bounce. It is at a support level on the indicator suggesting bullishness could potentially come back in. And I'm not teaching class tomorrow. We're going to go look at it today. All right. So let's go over to trade tab. And I have Walmart up here and looking at the potential days till expiration. Typically speaking, I like to stick with the, third Friday, kind of the standard contracts. And the reason being is that those tend to have the tightest bid-ask spreads. It doesn't mean they're always that way, but they tend to have the tightest bid-ask spreads. And so it's a good place to start, especially if you can make it work in that window of, and I like to look between like 30 and 40 days. We're a little bit off at 29 days till expiration, but, I like to start there and just see, is it possible? If not, then maybe we have to go out to the 36 or so. And so 29 days till expiration, we're going to go over and look at the put side. And we're going to do something bullish here, right? So we're going to create a short put spread and looking at the delta to kind of give us this estimate, because the delta is approximation for probabilities. It's not exactly probabilities, but it's an approximation. And so maybe we go with something like this, maybe the 125. So maybe we sell the 125 because that gives us a 40%, according to delta, 40% probability that it'll expire, in the money, which is 60% out of the money. So it gives us a little bit higher probability, but let's also look at what it does for us with the credit, okay? And so I'm gonna click on the bid and bring that one up. Now I'm gonna, let's make it just pull this up a little bit. And then that was the 125. And so I'm gonna hold down the control button and click on the ask of the 120. And that's gonna create this $5 wide spread right here, right? Everyone see that? And so if we sell the 125, that means we are in the obligation to buy the stock at 125, but then we can also, we're buying, the 120, so we could sell it to someone else at 120. So the most we could risk there or lose there is a $5, between, the difference between the strike prices. But, we keep this bouncing around. So let's just lock this in so we can talk some solid numbers. But this is going to give us a $1.60 credit. And so our reward, let's bring this up here, right? So our reward on the trade, that's going to be what, $1.60? Our risk on the trade is at $5 minus the $1.50, okay? So let's put a dollar sign in front of that. Let's get this out of the way so we can see that as well. So the risk is $5 minus the $1.60. And so that's going to give us an actual risk, excuse me, of 340, right? We can do that in our heads pretty easily. And so then if we look at the return on risk, well, we're going to divide that $1.60 divided by the 340, and that's going to be close to about 50%, isn't it? Yeah, 47% return on risk. So 47%. Whoops, what did I miss there? Return on risk. Did I lose my number lock? No. There we go, 47%. All right, so those are our numbers there. And so let's go ahead and run with that. And if our risk is, what do we say our risk is? 340. We've been doing $1,000 worth of risk in this class, and so let's stick with that. So $1,000 divided by the 340, which is $340 per contract, is 2.94. We're only going to do 2. We're going to round down, do 2 on this. All right. Then let me go ahead and move that to 2. Now, okay, now this is what I wanted to get to. All right. So in the past, I've just gone off and set this trade in place, and I said, I like to keep an eye on it, and each day I look at it and see what happens, and then make a move accordingly or make adjustments accordingly. But you've asked to say, okay, well, can we place some orders on here to get it out? If just set some orders to sell the position, right? Or get out of, I should say, buy back the position, exit the trade if we're not around. And we can. So here's what I want to do. I want to set this order in place. We got the one all set up that we need, right? We're going to set that off and send that. I'm going to come down here and hit first trigger sequential on this is advanced order, okay? And after I do that, what I want to do is come up and click somewhere on here. I want to right click on that and create a opposite order, because if we're selling to get in, we need to buy it to get out, and that would be our first exit. And I'm going to do that one more time, and I'll explain that here in just a second. So let's do create opposite order. And so now we have this entry. So we're selling to open. We have 2 buy to close basic positions. All right. And let me walk you through what we need to do here, because this is where it can get a little bit confusing on, okay, how do we set this up as far as stops and limits and everything else. And then I'll get to these questions that are coming up about, looks like Ben's doing a really good job covering the deltas and things like that, but I'll look over those in just a second here. Okay, but let me cover this so we make sure we understand this concept. All right. So on this trade, remember, we're on these short verticals, we're selling to open, right? And so therefore, what we need to do is we need to buy to close. And so it kind of reverses things from how we might typically have it, right? And so with that said, when we're selling to open, to actually do this, to close a position, what we need to do is we need to have a stop and we need to have a limit, okay? And I should put buy to close. That'll kind of flip how those stops and that limit work from what you might typically think, but we're going to buy this back. And what we got to do is we have to have a stop and a limit. And what each of these do is a little bit different. Let me grab my marker here. If we put a buy stop, what a buy stop says is buy back at this price or higher. And this one is the buy limit, which is buy it back at that price or less. Okay, so we're going to have these two orders in there. And by the way, I just want to stress again, I said this at the beginning, but I just want to stress this again, that when we place these orders, and if we place them, what do we say we're going to get in at? In fact, let's write that down. Let's put in here. We kind of entered this trade, or we're looking to enter the trade at $1.60, right? And so if we were to say, okay, let's set a stop loss that's, let's say 50%, meaning if it loses 60% of our potential gain, then we'll get out. Now, remember, we have to add that in there. That means if we have to buy this option back and it's $1.60, 50%, that would be 80 cents. And so if we add that into it, we're talking $2.40, right? That'd be a 50% loss because we have that and then it runs up. Now, if it drops down, what about to get out? Well, let's say we want to get out when it's at 10 or 20%, somewhere in there. Well, 10% of this would be 16 cents. 20% would be about 32 cents. Let's do around 30 cents on that. So that would be our limit. And I do want to stress with this again, that if we place these orders in there, these are going to turn into market orders, right? Just keep that in mind. So even though we say 30 cents or give me out at, 240, whatever, that may not be where we actually get filled, but that's where the order gets triggered, and then it can fill somewhere off of that. Okay. And so I got to come back so I can see your comments and stuff. This blinks it all out when I do this, but I just want to make sure we understand this idea that it's going to be a buy stop is going to be that price or higher. And so that's going to be our exit to get out if it goes awry, because remember, we're selling, we want this to drop down, the value of this to drop down to zero. And so if it's climbing, we're actually losing money on the trade, right? And then if it does drop down to a low price, that says get us out. They're about, 80% of the profits roughly. Okay. So let's come back here. We don't need to go white. We just need to see the screen, right? And we'll get rid of all this. So we've got 240 and 30 cents. So let's keep that in mind, and we'll get rid of all that. Okay. So here's our entry. So the first row that we have down below here, let's change that to our stop. And so I'm going to do actually, I'm going to change this to good till cancels on both before I forget. I always like to do that so I don't forget the good till cancels part. And then do a stop here. And this is where we're going to put in the 240. And then I'm going to leave that one as a limit. And this is where I'm going to put in the 30 cents. Okay. Now, one thing you can always do to kind of check it is you can always come over here and just say, okay, well, what does this mean? And I can click on the gear and it'll walk us through down below here. I have this buy, stop, there's our price at 240 and stuff. And it says, submit the following order. So we got to get that vertical in place, right? Then when trigger this, when the mark or the option price is at $2.40, let me move this over so we can see the rest of it. This order will show wait stop status because it's sitting there waiting to be triggered, all that kind of stuff. All right. So it's always good. I don't know, I just like to read through there just to make sure that I've checked it out. But that is the idea behind it, setting that order in place. Remember, this is placed on the value of the option. There are so many ways to do this. One could go through and say, okay, what about, placing it on the value to stop? And we could. What we'd have to do is make it so that the option value is just a market, and then place a trigger to be, an order to be triggered when the stock hits a certain value. And then what will the option be? Well, we don't exactly know. We can guess, maybe we wouldn't exactly know. And so that's where, it can be a little bit of a challenge there. So some people don't do that. This one, at least we have a better idea of where we're going to get out on the option value, but it's just, take it or leave it. There's just different ways to do that. So let's go ahead and confirm this and check out our order here. Okay. So we're selling the vertical. We're looking to receive $1.60, right? And then get out if it goes up to 240, which means we lose 80 cents on that, or get out if it drops down to 30 cents, which means we gain about 80% of the total value of that. And we're going to send that off. And it already filled. And one thing I like to do on that, now that was, what's the expiration on that? That was 29 days, right? Let's go over, let's see, 29 days. That's the third Friday in, that was the third Friday in March. So what is that? That's going to be the 20th? Looks like the 20th is third Friday. So what I like to do is go on to, do we have the third Friday, the 20th? Oh, so close, right there. It's right up against the edge of the screen. We can add a little bit more. If I come down here to these right arrows, I can change the right expansion. Actually, this is the one I want, not reset. Change right expansion setting. And I want it just a few more days in there. I'm just going to throw in 30 and hit apply, get that on there. You can see that gapped over just a little bit. And the reason I want that is to go in here and draw in what I'm looking for, right? Now we sold the 125. So let me remove this just so I can show you how to draw this in. Come on. Let me zoom in on this. If we can get it together, there we go. All right, so I want to come down here and grab a box. I like grabbing the rectangle tool. We're getting in on this day, and we need it above 125. And so I'm just right about here, 125. I'm going to click there and drag that over until the 20th. And the 20th, March 20th, is right there. Now, the height doesn't really matter. I mean, I just kind of take it up. But here's the idea, is that we want the price action to be above this level by the time we get here. Everyone with me on that? So, that's the idea, because if it's in that ballpark, we should well, by the time it gets here, we'd make max gain theoretically on that trade. But that just gives a good visualization of, okay, here's the ballpark we want to get in. Again, it can be higher isn't an issue. It's just this is where we want it to be above by this time. Is kind of the end of the trade, if you will. And that also gives us a kind of a visual of, are there any economic announcements, earnings announcements, anything to be concerned about. And we don't see anything. We do have the dividend, looks like coming up near the end of that, but we might be out of that trade before then. And you can also see here are our trades, kind of sitting out there. Okay, so let me go back and just check. Let's see, when a person hears, I'm just going back over some of the questions you've thrown in there. And I appreciate Ben covering this. It says, when a person hears that something is up big pre-market, is that helpful info or is it too late? It depends, right? I mean, usually for making a trade, obviously you can't go back and place a trade before it jumped, right? And so in that sense, it's over. But what it does, it tells you there's a move. There can be also, it can impact other stocks that are in that same industry group. And so that you might get a lift there, and you can be looking at other stocks that way. And I think it's just good to know, like, what's really moving. Can it, if it's something big that is a mega cap, it could be moving the market as well. And then Ben covered, it's almost always too late, but you kind of think same things I was saying here. Let's see. Ben covered the trend volatility. Let's see. When do you decide that time is right to do a short put vertical or not? And this is a good question, really. Generally speaking, what one might be looking for is something that's an uptrend, right? An uptrend near support. Basically, you're looking for that bounce, because the more it just moves away from that support area, wherever you're at, wherever we get in, right? The more it moves away from that, the better off we're going to be. And so, like, if we get here and we're expecting, have those Fibonacci drawn in there, right? They're kind of like this, but the stock will bounce and move like this. That's, great for our position. So really, just think about it. You want the overall trend going in your direction. So that could be, up. It could be, gently up, just something bullish, right? Either slightly bullish or really bullish. Sometimes if it's extremely bullish, this is where people say, hey, maybe I'll look at doing a long call, because, if we're really expecting the stock to make a strong move, sure, you can do a short put vertical, but it doesn't have the upside potential necessarily that just a long call would have. And so, but, it does have some other benefits where, hey, you got that time decay trade-off. But generally speaking, the idea would be that if it's going to go up strong, maybe a long call might be a better option. If it's going to go up generally, or moderately, then a short put vertical can work out. So getting the trend in place and then looking for it to make that, reversal, kind of bounce and head higher. Or it can also be breaking through resistance area, right? maybe it bounced and broke up, and we got too many lines going on here, but maybe it broke through a resistance area. And the idea being is that it's going to continue up from there. But generally speaking, it's that simple. Looking for one, the trend is going in the direction we need it to go. Two, it's at a position timing wise where it should move that direction. Okay. So looking at overall trend and then looking for that, like a bounce off support or break of resistance. I mean, it's really that simple. The challenging thing is just trying to find the stocks that match that, right? And then, of course, after you find the technicals, then we have to go in and look at, does it work out with the numbers? Like sometimes you look at you see a stock setting up technically, but then the bid-ask spreads are too wide, and just it doesn't make sense mathematically to place that type of a trade. And so that's another thing that comes up from time to time. All right, I'm going to go back in there and draw those Fibonacci's right back in there. And by the way, if I have these Fibonacci's, you can see I have these extensions that pop up above. If I pull down here, you can see the extensions, which are some potential price targets, depending on where this bounces. I went through all of this on a YouTube short. And so from our Trader Talk page, go over to the shorts, just click on shorts right there. And I've done several of them on Fibonacci's, and let me just see if I can see it in here. If not, I can search for it. But where are they? I've been creating more than I thought. I think it's breadth, 3 triangle patterns, and we got so many different ways to look at. Let me see if I can find it with Fibonacci's. Fibonacci. Oh wait, I misspelled it. I apologize. I can just do fibs and it's going to pull it up. No, it's not going to pull it up on the short. Oh, there it is. Creating stock chart targets with the Fibonacci tool. So this is the one, and it's only like a 2 minute and 45 second, where I'm going to go through and explain in this one, how I got those Fibonacci set up. And so go through, show you how it has the defaults, go in, change the settings, and how to read it with the retracements and the targets. So give that a quick look, 2 minutes and 40 seconds to get an idea on how to do it. Again, creating stock chart targets with Fibonacci tool. And it's right, if you go to shorts, which one is it? I have this on, I think, latest. So look at creating, does everyone see it in there? Right there, it's this one right here. That's what it looks like. Where's a potential flag pattern target? Right there. Okay. All right, let's get back over. Let me pull this out of the way. Let's get back over. And now what I want to do also is let's look at the trade that we have going currently. All right. And right now, if we go to our monitor tab, hide that for a minute, we have KMB. And as I don't know if there's been a Thursday that we've had where our current positions have actually been favorable, right? That something has gone our direction. I don't know what the deal is with the trades that we have in Thursdays, but it just seems like so many of them tend to take a dive on the Thursday, the day that we're talking about it. Because like before today, you can see we were up $40 and now we're down 10. What happened with KMB? But let's take a look at this, and I'll show you actually how we can place an order on that one as well. And so let's go to KMB. And then we're going to look at some more stocks and look at more opportunities. Whoops, KMB. Come on, did I get B? Yeah, there we go. Kimberly-Clark. Okay, so looking at this one. Now, this one, what we're looking at, and this again was a challenge of teaching a class, or looking at it that's not at the end of the day, where we're looking at this on this candle right here. And at that day when we were teaching in class, this candle was way up here. It was looking pretty good, but you can see it came back down. By the end of the day, it was looking like it was going to break above resistance. It did not do that. In fact, it came back down, and it's kind of been channeling sideways. And so, unfortunately, this didn't, give us the close that we were expecting. And so we have this position on here. One, we could just take it off because really it hasn't done what we expected. In fact, we never really got this solid buy signal on that of a break of resistance. And so we have two options. We can take it off, or we can set a stop loss, if you will, on this. And how about we just go in and place a stop loss to kind of keep in line with, how do we manage these trades, or how do we kind of maintain these trades? So let's do that, okay? And so what I want to do is go back over to the monitor tab, and all I need to do is right click on KMB. Now be careful, if you open this up and you right click on one of these, it's going to create one leg, and you'll get this, and they'll like set an order on that one leg, and we don't want that. We want to set an order that's going to be on the entire position, both legs. And so I'm just going to click up here, somewhere. I'm going to right click on there and say create closing order, and I can buy both those legs back. All right. And so what do we get into that on? $1.20. So $1.20, maybe we say, hey, $1.50 we get out on, or $1.60, just put something like, $1.60 would be 40-cent loss on that. A little bit tighter because we were really expecting it to move and it hadn't. And so, we can make that maybe just a little bit tighter. But let me go back again, walk you through that. So again, from the monitor tab, just right click, create closing order, and hit the top row, and we're going to buy that back, right? And again, I want to change that good till cancel. I'm going to show you something here. I'm going to put in, let's put in $1.60. Well, not that much, huh? And then here's the question: is it the limit? Is it a stop? This is where sometimes people get confused, like which is it? But I mentioned, if you go over there and click on that little gear on the right-hand side, this is going to say buy it back at $1.60 or better. Well, that would get us out immediately, wouldn't it? Because it's actually better than that. And so that would just sell us right at the moment. That's not what we want. And so that's where I'm saying it's sometimes good to read through this. And so if we change that to stop, though, so now we have that $1.60 with the stop, and then we click on that gear and read it. It says, okay, let's close that vertical when the price is at or above 160. Well, that's what we want, isn't it? That's what we want. Okay, good. So it's good to just double check that and make sure we're good with that. Okay, so yes, we got the order in there correctly. It has both contracts. It's a nice thing about saying create that closing order is it just creates it with everything correct as far as the contracts and everything. Don't have to worry if you got the right strikes and right expiration cycle and all that. It has all that done. We just need to make sure that we have our order in place there. Good till canceled. And then we're going to confirm and send. Just check that out. There we go. Buy that back, $1.60, and send that. And there we go. Now if we go back to chart, we'll probably see that sitting in there. There we go. And the question is, am I giving enough time? Well, here's the deal. The trade didn't really give us the entry signal that we were expecting, meaning what was happening during class didn't materialize at the end of the day. And so now I'm kind of in the spot like, okay, what do we do with it? Because it really hasn't given us, if you were looking at this, would you say it had a solid break above resistance? And it didn't, did it? And so we're not really getting that breakout that I just talked about earlier. We're not bouncing off support, nor did it break above resistance. And so again, the beauty of either waiting till the end of the day or getting in, early the next day. And we were hoping for that, but it just didn't materialize. And that's okay. These are all great training examples. And so with that said, since it didn't give us that exact signal we wanted, we actually have been, a week has gone by. Here's the great thing about it. A week has gone by and it's gone sideways, right? And where are we at? We're basically at break even. Had that been a long call, that would have been a losing position. But it didn't do what we wanted. Now, some people are saying, hey, it's actually looking like it's bouncing off resistance and could potentially roll back down. And I'm not arguing that at all. In fact, that's what I'm saying is it didn't do the bullish breakout that we're looking at. And so we could just exit it. But I wanted to stay in line with the theme of how do we place orders to on the positions, right? On the trades that either we have or that we're setting. And so I wanted to give you an example of setting it on a new trade and then setting it on an existing trade. Okay. And so hopefully that helps you out. Now let's look at a couple more. Let's see what else we still have some time left. Let's see what else we have out there. In fact, some that I left you with last week was like Halliburton. And wow, Halliburton's bouncing, isn't it? Came down, that one's bouncing. Maybe we could look to potentially place a trade there as it's heading up. Uptrend, bounced, kind of got a confirmation yesterday, a little bit higher than that today. There might be something there. Let's look over a couple more. Las Vegas Sands. This one, we're looking for a return to resistance and a bounce off that. And it looks like it hasn't quite yet bounced. It's kind of channeling around at resistance. And so nothing quite there yet, but it could be setting up. Delta Airlines. This one we were looking, I had some support a little bit higher than this, but it looks like this one's still looking to come back and possibly come a little bit lower than that. And then BSX was another one that I brought up. And we're talking about this one as potentially doing a dead cat bounce where it comes down, rallies back up to that resistance area and bounces off that and heads back down. Well, it's starting to rally, but it hadn't made it up just yet. And so we're still going to keep an eye on that and see if it gets a little bit closer. Let's look over a couple other ones. Starbucks, maybe we can go back to Las Vegas. And Starbucks is in a winding up kind of a consolidation pattern, looking to possibly break out. And when it does break, it tends to, the idea is they'll break in the direction of the previous trend, which is bullish. So that one could possibly break up if, in fact, it does break up, right? AIG, here's a potential dead cat bounce. This one dropping down, rallying back up, potentially bouncing off this and rolling back down. That one's looking like it could potentially bounce down. So we do have a couple of them that we could run with, right? Let's see what we can do. Let's see what we can do. So we had LVS, I think we talked about. We had HAL was another one, and SBUX. Let's see what else. Let's see what Starbucks has, because this actually is at a support level, looking to bounce head higher. And with that consolidation, it might even give us, if it can break above that resistance, which isn't super strong, it's just that consolidation, it could give us a pop to the upside and help us capture the gains a little bit more quickly than a drift up. And so let's go and see if this one can offer us anything. And again, this is where we start with the technicals, look at what it offers, and then go over to the trade tab. And we brought Starbucks up. Again, I'm going to stick with that March 20th, see if we can make something work on this. 29 days till expiration. And then we're going to go out and look at a bullish trade. So we're going to look at the put side, come down, looking for a delta somewhere between 30 to 40-ish, somewhere in there. Now, this is interesting. We got a 24 and a 47, right? And so this one, 90, I don't know what that's going to offer us. I mean, this is a little bit low, meaning sometimes when you get a very low delta, and so kind of a higher probability trade, there's not a lot of juice in it. But let's just check it. So let's do a 90, and then I'm going to right click and hold down that button and hit the ask on the 85. And here, so we have a 5-wide spread, and so we have $5 of risk and only 75-cent credits. That means we're risking $4.25 to go after 75 cents. And you can kind of do the math in your head, just knowing, okay, that probably isn't great, right? So come over here, we're getting like 17% return on risk. Okay, all right, let's keep that in mind. Let's bump that up a little bit. Let's check out what this 95 is going to do versus the 95.90. And now we're getting $1.68. And so that's a little stronger. I wonder if we can even squeeze out $1.70, which can happen more in in paper money, right? Like live account doesn't quite feel as nicely, but sometimes we can go in there and say, okay, this trade will be worth it if I can get this much. Maybe it's not there right now, but between now and the end of the day, or maybe we put it throughout the week. By the end of the week, if it doesn't feel, that's okay. That's okay. But if it does, then great. We got a little bit more credit for it. And there, if we do this one, this is very similar to the one we had before, where we got $1.60. So this is $1.70. And if we subtract that from the $5, $5 difference, right? That's our risk, $5 difference, but we'd keep the $1.70. That's going to give us $3.30, right? $330 risk. And so that $1.70 divided by the $3.30 is going to give us a return on risk of about 51%, 52%. And so it's, you can see this one is actually more of a kind of this directional almost type trade. And if we're looking for that bounce, sometimes that makes sense, right? We're getting in a little bit more directional. Let's go ahead and place a trade on this one, and we'll also place a stop and a target with the time that we have left. And so what do we have? The risk on that, what did we say? 330, right? Oh, hey, that one's going to allow us. The prior one, we're just shy of 3, but if we have $1,000 risk divided by 330, well, you can probably do the math in your head and realize that gives us $10 to spare. That'd be $9.90, so that'd allow us to do 3 contracts. And so I'm going to go down to 1, 2, 3. 3 contracts. And then with this, let's also do that stop and that target. And so I'm going to come down here, do that first triggers OCO. So once the first one, I mean, our entry is set, then we're going to trigger this one cancels the other. The idea being that when if our stop is triggered, cancel the target. If our target's triggered, cancel the stop. That's the OCO. So I'm going to do now create opposite order, do that once, create opposite order, do that twice. Okay. Again, I want to make sure I get these good till canceled. Just the way I always just want to make sure I don't miss those, because I've done that in the past, and you don't want to do that. You think you have a stop or target in there, you can go check it out and you realize, oh, it's not there. So I always try to make sure I get that. Again, it's saying, okay, so we're looking to receive $1.70. Well, if we're looking to risk, take about a 50% loss on that. What's $1.70 divided by 2? Well, that's going to give us about 85, right? So 85 cents. And so if we need to add that back in, so 85 plus the $1.70, that means 255 would be where our stop would be. So get us out when that hits 255. And then if we go 10% of that, that'd be 17 cents. And so 20 would be 34 cents, right? So that could be our limit, meaning if we got 80% of it, that'd be about 34 cents. And so let's go ahead and put that 34 in there. And I mean, I just do it with the 10%. It makes it easy math for me. You just take whatever you take. The 10th is always easy to figure out, and double it. And that gives us, our 80% gain on that. All right, so getting in here, looking to exit if it runs up about 50% of what you could potentially make. And then when we get 80% of the potential full gain, then get us out there. So we have our trades in place, good till canceled. First triggers OCO. Go ahead and hit confirm and send. And just make sure there aren't any red lines to check out. Make sure we're not missing anything. Go ahead and send that off. And this one as well. I'm going to draw a box on that one. And we're going to say it needs to be above, what would you say, 95 by the 20th, right there. So somewhere in this ballpark is what we're shooting for. Okay. Stay above this line by the time it gets there. And you can see it's right at that. That's why this is like almost a 50-50 trade with that delta pretty close to 50. So, all right. We got a lot covered. Just want to do one more check on the chat. I really appreciate Ben. He's been doing a great job keeping up with all the questions you all are throwing out there. Call spreads with some of the ones not heading higher. So Mickey asks, hey, how about using some call spreads with some of the ones not heading higher? And we could. Yeah, we definitely could. The fact that overall market was bullish to, neutral to bullish, that's where I kind of moved more towards the bullish ones. But definitely, we showed some out there that we're bouncing or looking to bounce off resistance and heading down. And yeah, we could do those. And then Iron Condor, not part of this class, but we could make them into an Iron Condor. Yeah, okay. All right, looks like we got all of that covered, all that taken care of. So, hopefully you picked up some things. Again, talking about those Fibonacci's and whatnot, do go out and check out the videos I created on the shorts. And also, if you can, if you're not a subscriber, please do subscribe. Please do subscribe. It helps get these videos out there to you and others. It helps us expand our reach and continue to make these types of videos. Hey, Mike Fairborn is up next. Stick around. He's going to cover ThinkScript and show you how you can go in and do some programming on Thinkorswim, to create all kinds of fancy stuff. So please stick around for him. He's coming up next. Check out Ben Watson. He's all over the place teaching. In fact, he's all over the country. So join him in a live event too as they come up. And thank you for joining me. We'll keep an eye on this. We'll follow up on this next week. And again, go into the comments and leave your comments of what you want to see. What questions can we answer? What topics on short verticals can we address to help you get a better education and have a fuller knowledge of all this trading, right? Until then, though, have a great one, and we'll see you next week. Take care.